Hello and welcome. The French elections have concluded with Emmanuel Macron victorious, and he will move into the Élysée Palace as the 25th president of France. But what is the way forward for foreign exchange markets? Well, for that, we are in conversation with Greg Gibbs. He's a director of Amplifying Global FX Capital. Greg, thank you for joining us.
Welcome.
So, Greg, we've seen the euro strengthen against the dollar to a certain extent since the first round of the French election. What is the way forward, and how much more can we expect the euro to strengthen?
Well, if you look at the euro, not just against the US dollar, but also, say, against the Japanese yen and a number of other currencies, emerging market currencies, and in particular commodity currencies, it's performed quite considerably well since that first round election. It may have stalled against the US dollar here, somewhat below the 110 level, but certainly it's at new highs against the yen for the year and against a number of other currencies, including even gold. So the US dollar itself has performed well in the last week or so, but the euro has held its ground against the US dollar recently and moved to the higher end of its range. It hasn't extended today on the second round, but it does look quite solid overall. So it's just really consolidating here at the moment.
Greg, what does Macron's win mean for ECB's policies? Does this mean that the settings with respect to stimulus and various other settings as well remains the same?
Well, it certainly takes away a significant risk element that has been hanging around. This political risk in the Eurozone has been a factor, and the ECB hasn't really mentioned it in any of its statements, but certainly the market has been looking at the stronger growth figures we've seen this year, and if you look at the PMI figures, the survey figures, they've only risen to new highs recently for April. And even the inflation figure, the core inflation figure for April, popped back up again. So it does look like, overall their policies are working and they're on track to normalise, or will be on track to normalising policy next year. So if you like, now we've taken away a big part of that political risk, the market will focus back in on that normalisation in policy likely next year in the Eurozone.
Greg, you have written about political risk in Europe ebbing, but you also see a little bit of an increase with respect to political risk when it comes to US and Trump's policies. How are you viewing Trump's policies going forward, and what does that mean for the US dollar index?
The US dollar has been pretty mixed this year, and it took off early in the year when Trump was first elected, and he spoke about infrastructure spending and tax reform in particular. But I guess the early part of his presidency has been about immigration controls and border policy and trade policy concerns, which have had mixed impacts on the US dollar. He did come out, and his administration did come out and announce a very aggressive plan for tax policy a couple of weeks ago. But certainly the market now is looking at how that's going to get through Congress. And there are a number of hurdles that it's likely to face. And in particular, about when we get to September and October later this year, there'll be the debt ceiling issue will return in the US. So I think the market still has significant political risk associated with the US implementation of the policies. If we do get significant tax reform, as outlined by the Trump administration, with 15% corporate tax rate, the US dollar could perform very well at the end of the year or into next year. But the market still has that, political risk associated with implementation in the US at the moment.
You also had the Federal Reserve maintain status quo last week. What do you make of this commentary there, and how much more headroom does the Federal Reserve have when it comes to rate hikes going forward over the next, say, 6-8 months?
Well, we did get some comments from some Fed members, such as San Francisco Fed President Williams on Friday, after that very strong employment figure, with the unemployment falling to 4.4%, now well below the Fed's medium-term target of 4.8% on unemployment. So we haven't seen the wages pick up yet. So I guess, that does suggest they can not rush to raise rates, but certainly everything's moving in the direction they've stated earlier, or even as late as December last year. and they are moving towards raising rates steadily. And I think that's why the US dollar is performing a little better even today in Asia after that strong employment figure on Friday. It does point to a likely rate hike, for instance, in June. It does sort of suggest there's a good possibility you get another one in September. But then I guess then the market will be looking to the process where they're talking about winding back their quantitative easing or reducing the size of their balance sheet. And that will be a factor which comes into play later in the year. But, you know, they haven't had a smoking gun on inflation yet. Inflation's still below their target. The wages growth number was pretty subdued. So we get to see real evidence of inflation. If that was to kick in, or that could really change the picture for the Fed.
Right. So I'm going to come down to the emerging markets currencies basket. Among them, which of these currencies, according to you, are poised to strengthen further going forward?
Well, that's a tough question. You've seen quite a mixed performance in emerging currencies. I mean, the Indian rupee has been one of the stronger performing currencies. Its growth outcomes have been generally quite good this year. Their inflation numbers are coming down, and that's generally seen as positive. The Chinese yuan, for instance, has been one of the weaker currencies this year, and I think that the market is showing more concern over its sustainability of credit growth. And that's impacting on the Chinese currency. So that, you know, those two currencies are kind of moving in opposite directions, and that trend may continue. We have an election this week in Korea for the new president. The Korean won's actually been performing quite well. The Korean stocks have been performing quite well, but it has a number of risk elements associated with North Korea and that election. And the other Southeast Asian currencies have been relatively weak. It's maybe starting to show a bit of strength. So from a relative strength perspective, maybe you can see some strength returning to the higher risk Southeast Asian currencies like the Indonesian rupiah and Malaysian ringgit.
Talking specifically about the Indian rupee, the Reserve Bank of India seems comfortable with the levels at which the Indian rupee is trading at. However, there's a feeling that the Indian rupee is overvalued. That's at least some traders feel that way. What is your opinion specifically on the Indian rupee?
You know, it's not a currency which flashes cheap. That's certainly the case relative to other currencies. I mean, it has generally had a higher inflation rate over the years. You know, it still has some, I guess, balance of payments issues, and there's a lot to be done on reforming the economy. But it is moving in the right direction, and it does offer yield. And in this environment of generally low volatility, you can see the currency continue to strengthen. But yeah, it doesn't necessarily flash as a cheap currency from those broader measures of purchasing power parity.
Gibbs, it was a pleasure speaking with you. Thank you very much for your time.